This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on September 22nd, 2016. Our time is 8:48 Mountain. Radio show runs Sunday afternoon on 6:30 CHED at 3 o'clock. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us there. We're on your portable device, going anywhere you do. Also on YouTube, we have our own page, and tune in. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, our featured diamond of the week. And we'll talk about diamonds in the second half of the show, is a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. And this is a beautiful diamond that is very, very strong in color. A little later in the show, we'll talk about a blue diamond that was sold during the week in London. Well, as expected, and we predicted this on our radio show, the Federal Reserve in the United States did not hike interest rates. The probability of the next Federal Reserve rate hike coming by the end of the year rose to 60%, following Wednesday's Federal Open Market Committee statement, which showed that 3 voting members dissented from the majority view to hold interest rates unchanged. Well, the committee recognized that the case for rising rates had strengthened. It decided to hold on to a hike for the time being. Now, I would guess because of the U.S. election at the beginning of November, they go after that or they go in December. I don't see them going in October. I don't think that they want to play politics with the U.S. election. Donald Trump has already accused them of that. So, Harold, they didn't go in September, more than likely not in October. Very good chance in November and December at some point, and we'll have to see what will happen to the U.S. dollar and what will that mean for the Canadian dollar when they raise interest rates in the United States.
Well, exactly. Well, the thing is that obviously the market is continuing to trade within a range. Every time it gets close to 1,300, which it did at the beginning of this week, there's heavy support at 1,300, and the market bounces off that we're trading right now at about 1,330, 1,340. So you're right, Randy. The fact is that it doesn't make sense for them to raise interest rates prior to the election. And again, what is a quarter of a point really going to do to the overall market? All it does is signals the fact that the U.S. can raise interest rates. But without that, the U.S. dollar is still very strong. It's one of the strongest currencies in the world. It's trading just slightly below 96 cents at this particular point. And I do anticipate whether they raise interest rates or not, the U.S. dollar is going to rally. There's no doubt about it. Every other country is lowering interest rates. The United States is the only country that can and will eventually raise interest rates, but a 0.25% raise in interest rates is not going to have that much effect on the U.S. dollar. The U.S. dollar is the strongest currency, with all of Europe in disarray and China and other areas in major financial trouble. Most money is invested in the U.S. stock markets. So the fact is that it's not individual investors, it's more the funds, the European funds and that type of thing. So where the U.S. economy certainly is not phenomenal, it's better than most other economies, and that's why the U.S. dollar is remaining very strong. I do predict that the U.S. dollar will not only break par, but on top of that, it will go much higher than that because every other country is dropping their interest rates. Right now, with a 0.5% interest rate like it is in Canada and many other parts of the world, let's face it, there's very little opportunity for making any money. The banks don't make money. Most people cannot even borrow money unless you've got a phenomenal credit rating at these much lower rates. So the fact is that with low interest rates, all it really means is that nobody's going to get returns on investment. There used to be a time, obviously, when interest rates were higher that you could get 10% on your money. Now you're lucky to get 1% on your money. There's no way in the world at 1% return interest rates that you could ever retire unless you put away sizable amounts of money. And most people that do retire will outlive their money. So that's a frightening situation. Also, low interest rates, what it does is it forces you into other investments that are not suitable for most investors. If you look at trading stocks and mutual funds, even though most of us have been brought up with that and told by our fathers and grandfathers and mothers and everybody to buy good quality stocks and put them away for your future. Well, that may have worked in our fathers' days and our grandfathers' days, but it certainly doesn't work now. 90% of the people that trade stocks and mutual funds lose their money. I would say that the majority of retirement savings plans in Canada have been upside down for over 10 years now. Nobody's seeing any returns on investment. So what is the point of putting your money in a retirement savings plan if that retirement savings plan doesn't make you any money? So the fact is that all you're doing is delaying paying taxes on money that you're just not going to make any money with. So unfortunately, with low interest rates, again, below 1%, you can't make any return on your invested dollar. Then it forces you into other investments, again, which are not suitable for most investors. As I mentioned before, 90% of people that trade stocks lose their money. So what opportunities do we have in order to grow our money? Well, first of all, in this type of world where everything is risky, and again, with interest rates so low, there's so few opportunities, the fact is that what you really need to do is preserve your capital. That's the first and foremost. It's not just a matter of throwing your money into a market and hoping that you're going to make money with it. Because if you're trading commodities, if you're trading stocks, if you're trading mutual funds, the chances are that you have a 10% chance of making money unless you are an expert at trading those markets, and most people aren't. So the first thing is stay out of those markets. Because the fact is that you're better off holding on to your money and not making a return than putting into a market and losing your money. And that's unfortunately what's happening to most investors out there. So the fact is that the first thing about investing is capital preservation, preserving your capital, not losing your money. The second most important thing is obviously making return on your invested dollar. In this particular type of investment world that we live in, there's very few opportunities for the everyday hardworking man and woman to make any money. So the best situation there is to stay out of those markets because the odds are way against you making any money. We happen to have been correct in the markets for a long time. We caught the run in gold back in 1999, and we recommended gold at $250, and our clients rode that market all the way up to 1900. That was the biggest bull market of all time in precious metals. There's nothing that compared to that. Will we get another opportunity to see that? I do believe we will, but the markets have got to do certain things before that happens. There are other opportunities. For all the years that I've been dealing with my Canadian clients, I'm a Canadian living in the United States, we've allowed our clients to, at times, invest in certain programs with us, different opportunities, and they've done very well. In fact, many years ago, 3 to 4 years ago, it was one of our strongest recommendations to get your money out of Canadian-based investments and Canadian dollar-based investments and get them into the U.S. dollar-based investments. Because the fact is that if you can't make any money in the stock market or putting your money in the bank, you can certainly make money if you pick the right trend in the currency market. And the correct trend in the currency market was short the Canadian dollar. It was going to go down, and the U.S. dollar was going to go up. And that's where we have instructed our clients to put their money. And over the last 4 years, our clients have made about 30% a year just on the currency market alone. On top of that, we allow our Canadian clients to invest with us in certain private investments that we've done and dealt in for many, many years. And some of those returns have been about 25% a year. So the fact is that if you're not doing well at this particular point, and most aren't, it's a frightening time to be, in your 50s and 60s and 70s and wondering how you're going to get by, how you're ever going to retire, are you ever going to be able to stop working? And the fact is that under most circumstances, no, you're not, because unless you put away millions and millions of dollars or you're willing to live on next to nothing, that's the way your retirement is going to look. Again, my recommendation at this point, and there's still plenty of time to do this, is to get some money into U.S. dollar-based investments, not stocks or commodities or that type of thing. Some of our private investments that pay, very high rate of returns, number one, and they pay them in U.S. dollars, which is the greatest thing because I believe that the Canadian dollar is going to drop to 160 to 170. And on top of that, I believe that the U.S. dollar is going to go to 110. Which means that we could see a return of 40, 50, and maybe 60% just on the currency alone, let alone what we would return on our investments. So if you'd like to learn about this and talk to me privately, it would be my pleasure to do so. Just give us a call, and I'll set up an appointment for you, and you and I can talk. And again, we don't deal with Warren Buffett and those type of investors. Most of my clients are hard-working, everyday Canadians that just want a break, just want an opportunity to get a little bit of ahead. It's been very tough in Canada the last few years. The dollar has plummeted. The oil market has plummeted. And look what's happening up in Fort McMurray and in Alberta. The real estate market in Canada is in dire straits. The fact is that the markets in Canada right now, in Vancouver and in Toronto, have skyrocketed to such a high level that the Canadian government had to impose a 15% tax on foreign investors that actually were investing in U.S. real estate. And one of the most frightening things is that they added this tax of 15% to slow down the real estate market. Whether that's the right thing to do or not, there's other inherent problems that happen with that. For example, it can affect a lot of situations with the banks because the price of real estate can decline at this particular point. So if the price of real estate declines and the banks that are holding the mortgages on these real estate projects are in trouble, then we're going to start to see the banks in Canada get in trouble. And listen to this. For those that have not heard this yet, we reported this about a month ago, but the Canadian government, unbeknownst to most Canadians, have approved a bill called C-15. And amongst many other things that are involved in this C-15 bill, it allows for bank bail-ins. Now, most of the banks in Canada are government-owned. So you would think that if the banks got in trouble, just like what happened with the banks in the United States in 2008, that the Canadian government would step up and bail out these banks, like the U.S. did back in 2008 and 9. Oh, no, that did not happen. What did the Canadian government decide to do? They decided to allow for bail-ins. The bail-in is the opposite of a bailout. A bailout is when the government comes in and steps up and bails out the bank by putting in money. A bail-in is when the banks are allowed to consider you a creditor and steal all of your money. Now, in Canada, what this basically means is that you have $100,000 insurance on your bank account. So if the bank goes under and you have $100,000 in the bank, you're insured up to $100,000. You'll get that $100,000 back. However, if that bank goes under, and now with these new bail-ins, and you've got $500,000 sitting in the bank's going to take $400,000 of your money. They're going to pay off their debts, and they're going to give you worthless shares in that bank. This is what the Canadian government has just allowed. For those of you that don't know this or have not heard this before, go on Google and type in C-15 bill in Canada and type in bail-ins, and you're going to be shocked. It is not safe to keep your money in the bank unless you're just keeping the minimum in there, and then there's other situations happening. So why would the Canadian government allow bail-ins? Because they don't want to bail out their own banks, and they know with this new real estate tax and situation that the real estate market in Canada is going to fall. You got to get some of your money out of Canada and into U.S.-based investments in U.S. dollars, and I can help you do that. Just give me a call, and I'll sit down with you over the phone as long as you possibly need and explain to you what your options are and how you can get out of the doldrums and back into making money again.
Speak with Harold, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. We'll talk about diamonds in the second half of the show. Our featured diamond of the week is a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. See it at rarecoloreddiamonds.com. Featured diamond of the week. In this environment, it's very hard to retire. because of negative interest rates, low interest rates, and that's where Harold comes in. He's got programs where you can start making money today. Take the time to call him. The call is free. What is discussed is confidential. Call him today, 1-800-432-1022, or go to the website rarecoloreddiamonds.com. One of the big concerns, and this is a carryover from the financial crisis, is the banking system in Europe. Italy is a systemic risk and could become investors' new obsession. For the past several years, investors have been held hostage by the possibility that Greece might default on its debt and eventually leave the Eurozone. The thought process is that a Grexit would create a domino effect in Europe in which countries like Portugal, Ireland, Italy, and Spain would then choose to leave the Eurozone as well. And while Greece's problems continue to be kicked down the road, a new problem is coming to the forefront. Italy is facing a full-blown banking crisis. On Tuesday, trading in Bank di Siena, the world's oldest bank and the third largest lender in Italy, with almost 170 billion euros, 190 billion US dollars in assets, was halted after the shares slid nearly 6% over concerns of weak investor interest in its emergency rescue plan. About 50 billion euros, or about 30% of the bank's assets, are bad loans. And while the bank is being privately funded, the bailout fund will be buying assets. BMI research says that alone may not be enough. Additionally, the country's two largest lenders, UniCredit and Intesa Sanpaolo, are among those that are backing the bailout fund. So their bottom lines will feel it if things go bad. In response, shares of Italian banks have been hammered to their lowest levels since the financial crisis. So here you have banks in Italy in serious trouble, but it gets better. China now is facing a full-blown banking crisis as well, according to the world's top financial watchdog. China has failed to curb excesses in the credit system and faces mounting risks of a full-blown banking crisis, according to early warning indicators released by the world's top financial watchdog. A key gauge of credit vulnerability is now 3 times over the danger threshold and has continued to deteriorate, despite pledges by the Chinese Prime Minister to wean the economy off debt-driven growth before it's too late. The BIS, Bank of International Settlements, warned in its quarterly report that China's credit-to-GDP gap has reached 30.1, the highest to date, and in a different league altogether from any other major country tracked by the institution. It also significantly is higher than the scores in East Asia's speculative boom in 1997 or in the U.S. subprime bubble before the Lehman crisis. Studies of earlier banking crises around the world over the last 60 years suggest that any score above 10, so here we are at 30.1, any score above 10 requires careful monitoring. The credit-to-GDP gap measures deviations from normal patterns within any one country and therefore strips out any cultural differences. But here we have Italy, a systemic risk. Obviously, people very, very concerned what's happening there. There could be a full-blown banking crisis in Italy. You add to it China possibly facing a full-blown banking crisis. Harold, it's a time where we really believe that you need to profit and protect the money that you have. Yes, you want to obviously be making money in this environment, which is very difficult to do, but you can speak with Harold. He has plans in place to help you make money today, but protecting the money that you have, having that insurance policy in your portfolio, which we believe is hard assets. And really, one of the quotes that we had in our newsletter And this is from James Turk, the next financial crisis will be like 2008, except worse, because the level of debt is so much greater today. That means counterparty risk is so much greater. And there's only one way to avoid counterparty risk. Don't hold paper. Hold tangible assets. That according to James Turk. And when he talks about counterparty risk, he means holding money and assets in banking institutions. Harold, we have about 3 minutes in our segment here. Obviously, very frightening to hear about the situation in Italy and China, because here we go again. Are we due for another financial crisis?
Well, the thing is that most of these countries have opportunities to print money and bail them out short term. Europe's in huge trouble. China's got all the opportunity in the world to do whatever they want because they're communists and we know nothing about what really goes on behind the scenes there. And as I said before, the United States has got holding most of the cards at this particular point. Their dollar is remaining strong. I don't see the U.S. dollar backing off at this point. Anybody who is investing in the U.S. markets at this point. So the other thing is that with all the debt that's out there, if interest rates were higher, I could understand the fear, but interest rates are at 0.5% right now. So, the fact is that I do see a lot of problems in Europe, and what they're saying about Italy, we've known about for 2 or 3 years now, and it could get a lot worse. What we need to do as investors, we don't want to follow the crowd. All we want to do is make certain as individuals that we do the right things for ourselves and our family. And the smartest thing to do right now is to get some money into U.S. dollar-based investments. There's still time, and you can still make a tremendous amount of money. Just give me a call, and I'll show you how to do that.
1-800-432-1022. Speak personally and privately with Harold about investing in different programs he has today to help you start making money right away. RareColoredDiamonds.com, the website, the telephone number, 1-800-432-1022. We've mentioned on past shows that the United States has approximately $19.5 trillion in debt. And before U.S. President Obama is done, they're saying it could be around $21 trillion. Now, here's some perspective on the U.S. national debt as it approaches $20 trillion. The U.S. national debt is coming in on $20 trillion. That's 20,000 billion, or 20 million million. If you stacked 20 trillion worth of $1,000 bills, it would supposedly reach something like 1,200 miles high. But here's the real kicker, the one that I really like the best. If you lived to be 80 years old, you would have to spend $700 million a day to run out of money. So think about it, 20 trillion. If you live to 80 years old, you'd have to spend $700 million a day to run out of money. The United States definitely has a debt problem. It will be interesting to see how that plays out in the years to come. Connect with Harold. RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 2.09 carat emerald cut fancy vivid yellow internally flawless. See it at RareColoredDiamonds.com, featured diamond of the week. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September 22nd, 2016. Our time is 9:12 Mountain. A radio show runs 6:30 CHAD in Edmonton, Sunday afternoon at 3. And don't forget, if you ever miss a radio show, they're archived. They're streaming live for you 24/7 at HESradio.com and RareColoredDiamonds.com. Podcast through iTunes, The World Financial Report on Radio. Plug that in. You'll find us there. You can put us on your portable device. Subscribe to the podcast. We are portable. We go anywhere you do. Also on YouTube. We have our YouTube page, and tune in as well. Connect with Harold at RareColoredDiamonds.com, 1-800-432-1022, 1-800-432-1022. The website is RareColoredDiamonds.com. Our featured diamond of the week is a 2.09 carat emerald cut fancy vivid yellow internally flawless. and go and see this online featured diamond of the week. It is a vibrant yellow diamond. Some news from the week. Auction house Bonhams sold for, and this is in British pounds, 2.3 million US dollars, almost 3 million, a rare blue diamond. The diamond, which came from a private British collection, weighed 3.18 carats and sold for close to 800,000 per carat. That's 610 in British pounds. Jean Gilka, head of jewelry for Bonhams UK and Europe, said blue diamonds account for only 0.004 of all diamonds mined and therefore exceptionally rare and remain highly sought after. The prices achieved in today's auction demonstrate that the global demand for colored diamonds remains very, very strong. But Harold, we'll be having more auctions, obviously, in the fall with Christie's and Sotheby's, but things kicking off in London with Bonhams selling for close to $3 million, a rare blue diamond. And today we have our featured diamond, a very rare museum-quality yellow diamond.
You bet we do. Boy, blue diamonds over the last several years have increased so substantially that there's no other investment on earth that compares to what blue diamonds have done. Really, back in 2003, I remember an auction where an important vivid blue diamond went up for sale, and it sold for $200,000 a carat. So that was basically 13 years ago. They were selling for $200,000 a carat at auction back then. Within this year, we have seen several vivid blue diamonds sell for $4 million a carat. We've seen several vivid blue diamonds sell for over $25 and $30 million. We've seen Shirley Temple's diamond that was purchased by her father for her in 1940 that he paid about $7,500 for. We saw that diamond go up for a bid this year. It was a fancy deep blue, and it belonged to Shirley Temple. They paid $7,500 for it. It sold for $25 million. So the thing is that diamonds do extremely well. Rare diamonds. Not everyday diamonds, but rare diamonds. They're not a short-term investment. You put them away for a long time. You put them away for 10, 20, 30 years, and these diamonds go up tremendously in value. If you're younger, if you're in your 20s and 30s, these are excellent investments to put away for your retirement. You know, you could put money into a retirement savings plan and sit there for 20, 30 years and not make a dime. In fact, you could lose money on it. In fact, most people do. However, with the right type of diamond, you could see that diamond increase in value tremendously. In actual fact, I've given and put away diamonds for my grandchildren. So when they're in their late 20s, early 30s, and ready to make their mark on the world, they have an asset that is worth something. You know, at the beginning of the show, when we talked about investments in general, and we talked about the most important thing in an investment is capital preservation, that you don't want to invest in something that you'll lose your money. Well, this is a perfect example because rare colored diamonds never decline in value. Never. They're so few and far between that these diamonds can go up tremendously. They can go up 15, 20% a year or more, depending on the color. Again, in the case of vivid blues, in 2003, they were $200,000 a carat. It's now 2016, and they're selling for $4 million a carat. So the fact is that assets like this do not trade on exchanges like stocks and commodities type of thing. This is not a mass market. It's a very small market. But the fact is that the returns on diamonds are much better than on stocks, mutual funds, commodities, and all those type of things. All you need to do is put them away, either put them in a beautiful setting for your wife to wear and let her enjoy the beauty of wearing a yellow or a green or a blue or an orange or a red or a pink diamond, and then sell it. Christie's and Sotheby's will sell diamonds, but we own our own auction business. It's called H. Siegel Fine Auctions, and it's a virtual live auction that will sell diamonds all over the world via your iPhone, your iPad, or your computer. We'll start to hold auctions again around the end of this year. So the diamond market is on fire. We've seen green diamonds, vivid green diamond. The only vivid green diamond that came up for sale this year, and it was a 5-carat diamond. It sold for $15 million. These are the type of returns that these diamonds are showing. We actually mine green and orange diamonds. We have some of the rarest green and orange diamonds that the world has ever seen, and we allow our clients actually to invest in these with us. In fact, last week, we showed as the featured diamond one of the rarest green diamonds ever in the world. It was rough and uncut. It just came out of the mine, but it was a spectacular, nearly flawless, intense green diamond over 5 carats. On top of that, we have orange diamonds. We showed 2 weeks ago a vivid orange 2-carat uncut rough diamond. Some people said it was the most beautiful diamond they've ever seen in their life. And don't forget, this is not cut and polished yet. These are the type of investments that we allow our clients to partner with us on. And these are all in U.S. dollars, and the returns are substantial. So, again, give us a call and give us a try. Let us explain to you how you can get involved. And you don't have to be a multimillionaire to do it. Most of our clients are just hardworking, everyday Canadians that just want a better deal, and you're not going to get a good deal putting your money in the bank at 1% or less, 0.5%, or going into the very risky stock market. So, Randy, the featured diamond is over 2 carats. There's only one diamond in 15 million that are over 2 carats, and I can almost guarantee you that none of them compare to the featured diamond this week. So looking at that particular diamond, what makes this diamond so rare and so valuable is the 4 C's. So basically, when you look at a diamond like this is not only a yellow diamond, but this is a vivid yellow diamond, which is the highest saturation of color. So the Gemological Institute of America, known as GIA, Gemological Institute of America, which is in New York and in California, what they do, amongst other things, their main business is that they grade diamonds. So when a diamond comes out of the ground and is cut and polished, it is sent to New York or brought to New York to the Gemological Institute of America, where they will examine that diamond and put it through all these different tests. And basically, what they want to determine is the 4 C's, how valuable this particular diamond is. So let's again view the featured diamond, and let me explain to you what makes this diamond so sensational. Now, first of all, just by looking at it, you know that this is an extremely rare and magnificent diamond. Very, very few diamonds in the world exist in this particular color, cut, clarity, or carat weight. So, as I mentioned before, first of all, to get a diamond that's over 2 carats is very, very difficult, because only one diamond in every 15 million is over 2 carats, and very few of them have the components of this particular diamond. This is an Asher cut, a square emerald cut, the most beautiful of all cuts of diamonds, in mine and many others' opinion. This is such a rare diamond. It's also known as a step cut because there's different levels to it. It's very, very difficult to cut a diamond like this. In actual fact, this particular diamond came from a 5-carat rough. It was cut down to a 2.09 emerald cut or Asher cut, fancy, vivid yellow, internally flawless diamond. So not only is this diamond over 2 carats, which is extremely rare, it's an Asher cut, which is one of the rarest of all cuts. The color is the best that you can possibly get, fancy, vivid yellow. Forgetting about the lower grades of yellows, but when GIA grades a yellow diamond, it'll either be a fancy light yellow, which is known as a canary diamond, a fancy yellow, a fancy intense yellow, the odd time a fancy deep yellow, but the rarest of all are fancy vivid yellow, and this particular diamond is. And then on top of that, there's all these different clarities, because most diamonds are flawed. Very, very few are ever flawless, but this diamond is. It's internally flawless. There's no flaws. It's the best color. It's a 10 out of 10. It's the best cut. An emerald cut and round cuts are the rarest of all, and it's over 2 carats. A diamond like this will do nothing but go up in value, and you put a diamond like this away for 10 or 20 years, you're talking about a diamond that will go and return more than any investment that you've seen before. So that's what this featured diamond is all about. It's spectacular, and it is for sale. And some lucky investor will end up with this diamond. The other thing is portable private wealth, because diamonds like this are private. Nobody knows that you own them. They're not listed on your portfolio. The government can't go in and say, the government can tell how much you have in stocks or how much you have in the bank or how much you have in gold or anything like that. But they could never tell what you have as far as a diamond goes. In fact, diamonds are portable private wealth. Many people buy diamonds because they can be sold in other currencies. And right now, they're priced in U.S. dollars. So you can imagine that Canadian clients that bought diamonds many years ago in Canadian dollars are now looking at their investment has gone up by almost 30% just on the currency alone. And soon that's going to be even more because the U.S. dollar is going to go higher and the Canadian dollar is going to get lower. This is a perfect investment for a long-term investor that doesn't like risk because, again, all you need to do is put this away in a safety deposit box, and when the time comes, that diamond can go up for auction, and you can see tremendous returns on it. So, again, Randy, with everything happening in the world today, the opportunity to invest in pink and blue and yellow and green and orange diamonds is just an unbelievable opportunity, especially with what's happening in the currency markets and the interest rate markets. Diamonds are way more valuable than any asset out there, and the auctions are certainly proving that for us.
Connect with Harold, 1-800-432-1022. Mark this number down. If you can't call right now, call a little later on, 1-800-432-1022. Call is free, and anything you discuss with Harold is private. The website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. We had some info on last week's show, and it was a very strong article. It was called Cannot Lose. Well, there are risks. Some of the top-range diamonds can be highly profitable for investors. Prized gemstones continue to command record prices as supply is very limited and demand high. Diamonds make you feel good. They're up there with, obviously, the extravagant. Investing in diamonds is a powerful psychological edge over your tech startup company shares or natural gas futures because they are so desirable on such a personal level. And this was an outstanding article because they went into what I thought was a great analogy. Collectible diamonds of exceptional size, quality, and color, perhaps associated with a celebrity or historical figure, are fetching astronomical prices, as was the case with the Shirley Temple Blue. There are obvious advantages to diamonds. They're portable, durable, rare, and not subject to significant public opinion shifts, as so many commodities are today affected by those considerations. Now, they go on to say diamonds are easily stored by individuals and require no special conditions, unlike investment wines. Arnaud Bastien, president and CEO of Graph Diamonds Asia, says, "I always recommend my clients to buy the best. You never go wrong when you buy the best. This is valid for every class of asset, from property to wine, from art to diamonds. Diamonds are unlikely to lose their value. Over the years, we have heard that they could be threatened by many such things as new mines, synthetic diamonds, and so on, but prices have always gone up. It's a bit like a Picasso painting. Today, you can find a way to reproduce a Picasso painting to be identical, but somehow a real Picasso will always remain a real Picasso, and as a result, it will command a very, very hefty price. We say that diamonds are nature's art, millions of years in the making. And not only is it an investment, but it's something that obviously you can showcase by wearing it. And it's wealth, and obviously at the same time, you can wear it anywhere you go. And that's one of the beautiful things about investing in diamonds. Now, Harold touched on it. For the last 2 weeks, we had rough diamonds as our featured diamond of the week. The green diamond Harold touched on was a 5.14 carat rough, fancy, intense green VVS1. The week before that, it was a 2.0 carat rough, fancy, vivid orange. And Harold, I know that people, when they saw these diamonds, even though they were rough, were very, very impressed with how they looked, and you start to fantasize at that point how they're going to get cut, what they'll look like when they're placed in jewelry. The mind does wander and start to speculate. But our listeners of the radio show, can they still be a part of investing in those diamonds at this point?
Yes, they certainly can. Those are the type of investments that I've been talking about, letting our Canadian clients partner with us on these diamonds. It basically takes 18 months to cut, polish, and get them certified through GIA. We pre-sell the diamonds, and our clients and I double our money over 18 months. So it's a phenomenal opportunity. It's restricted only to our Canadian clients. And the fact is that we also had a 50 carat, flawless white, perfect diamond that will end up being cut down to about a 30 carat diamond. Now, the thing is that most people ask, what happens once the diamond is cut from 50 carats to 30 carats? You're losing 20 carats. Do you make smaller diamonds with that? No, actually, it doesn't. The rest of the diamond is unusable. So when they look at a diamond like that 50 carat deep flawless white, it may take 6 or 8 months to cut that diamond alone because it's such an amazing diamond. It's got to be mapped out and it's got to be cut by a master cutter. So these are just phenomenal times. Very difficult for most people to make money. My company is doing very well because we're in alternative assets. We're not in stocks. We're not in paper. We're not in anything like that. Everything that we own is tangible. And that's basically the way that I've always wanted it. So with the way things are at this point here, there are opportunities. And not only that, the opportunities are in American dollars, and I think that the difference between Canadian and American dollars eventually will be as much as 50%. So there's an opportunity to make a tremendous amount of money over the next few years, while most others are not. So give us a call if this is of interest to you. We'll explain it to you, and if it's comfortable for you, we can certainly show you how to get involved.
Ask Harold about our featured diamond of the week, the 2.09 carat emerald cut fancy vivid yellow internally flawless. See it online, featured diamond of the week, rarecoloreddiamonds.com. Get our free weekly newsletter from Harold. Speak with him, 1-800-432-1022, or connect at rarecoloreddiamonds.com. We'll be happy to send it out to you. And in past newsletters, we did feature, and we had pictures of that 5.14 carat rough, fancy, intense green, VVS1. If you're interested in investing in that, speak with Harold. As well, we have the other diamond that got incredible interest, and that was the 2 carat rough, fancy, vivid orange. We can send out a picture to you, and you can take a look at those two diamonds. We're in a time right now where it's very hard to retire, and it's actually very confusing when it comes to the financial world and the geopolitical world. Will we ever be able to retire due to low interest rates? Central banks have manipulated stocks, bonds, and real estate to a point where they're historically overvalued and could face a major correction at any time. As Harold was saying, there's Bill C-15, where here we are in Canada. We are in the bail-in sector now, where banks, if they go bad, they will be bailed out by the investors. Also, you have a weak Canadian dollar, concerns of oil prices, housing issues in Vancouver and Toronto, cashless society, lots of financial questions today, and so many people looking for answers. And that's why we do our radio show, to give you the answers, and that's why Harold is there at the end of the line, 1-800-432-1022, to speak with you about the different investment opportunities that he has, so you can start making money today. And Harold, that's one of the things that we have in our free weekly newsletter this week. There are some major figures who have come out, and they are very, very concerned about a stock market pullback. We're hearing from different sources that you could have a pullback of possibly 25%, and that's Goldman Sachs saying 25%. There's also a hedge fund manager, Robert Citron, who's saying that over the next 3 to 4 months, we could see a large correction, the largest since 2008. And a lot of it has to do with low interest rates and some assets like stocks, bonds, real estate being artificially inflated. And eventually, at some point, they are going to come down, and it could be very, very nasty.
You bet. You bet. You never know when it's going to come, but the fact is that there's certainly opportunities in the market for that to happen. All the things that you mentioned, Randy, plus the derivatives market, which is the most frightening of all markets. It's unregulated. It's in the quadrillions of dollars. And again, all these things can happen. Get out of the stock market. You're never going to make any money in it. Let's talk, and let me explain to you how you can go a different route and still prosper in these extremely difficult times.
Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. Speak with him about our featured diamond of the week, a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. See it for yourself, rarecoloreddiamonds.com, featured diamond of the week. Great quote from Egon von Greyers. And Egon, he's been very correct in a lot of predictions he's made about the financial markets and the gold market as well. He says, it was no surprise to me the Fed did not raise interest rates on Wednesday because I've repeatedly said on King World News that the Fed would not raise rates. The Fed knows that the true economic figures are not good. The real figures are disastrous. The global situation is incredibly serious, and the banking system in Europe is now on the verge of collapse. So the ECB is standing ready to increase money printing because without that, neither Deutsche Bank, nor the Italian banks, nor the Greek banks will survive. Gold and silver are on their way initially. He's obviously very, very bullish to 10,000 and silver, gold to 10,000, silver to 1,000. But they will soar to much greater heights as hyperinflation gets underway, as the massive money printing experiment accelerates and then leads to total collapse. Obviously, Harold, a very extreme view, but I don't necessarily know if I agree with him on the price for gold and silver, but it is possible. But when it comes to what he's saying in regard to Europe and a possible collapse of the banking system, without a doubt, that is a great possibility from what we're hearing about the Italian banks and even what's happening in China. We have 2 minutes left.
You know, it is possible, but the world is not going to come to an end. And the fact is that times may be difficult, but the fact is the world is not going to come to an end. So Europe's going to have to get their act together. They're going to have to start printing money and working closer together and not, having Britain and countries like that leave the European Union because it just continues to weaken it. But we'll get through this. The fact is that if you do what everybody else does, you're going to be in the same boat as everybody else. We need to think outside the box. We can't go like lamb to slaughter, because if you're doing what most people are doing, which is investing in stocks and paper assets, you're going to wake up one morning and find out that you have no more money. So again, at this particular point, let's be smart about things, be conservative, don't speculate, get out of all risky investments, and let's regroup and figure out a more profitable and more comfortable route for you to go than trading the markets that 90% of the people lose in.
Our featured diamond of the week from rarecoloreddiamonds.com, a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless, is our featured diamond. You can see it at rarecoloreddiamonds.com, and you can ask Harold about past diamonds that we had because they were so unique and an incredible opportunity there. 2 carat rough, fancy, vivid orange. We also had a green diamond that looked like it was out of the movies, out of a TV show, a 5.14 carat rough, fancy, intense green VVS1. And ask about those diamonds as well when you speak with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Harold, approximately 15 seconds left. Thank you for another great show.
It's been my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
As Harold has said for a long time, how do you invest today so you can retire tomorrow? That's why we do our radio show. Obviously, people are wondering, what does a bail-in mean, C15? What does that mean for a Canadian investor? Negative interest rates, weak Canadian dollar, low oil prices. possible housing problems in Vancouver and Toronto, cashless society. Speak with Harold. Get the answers. 1-800-432-1022 or go to rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.